Is it a bad idea to invest in SpaceX or other pre-IPO companies? Maybe it is and maybe it's not, and we're gonna talk about it all starting right now. If it's your first time here, I'm Will West, and I just want to find the objective truth that will help you make better investing decisions. Would it be a bad idea to gently tap on that red subscribe and the bell icon? It costs nothing and you will get notified of any new videos. First of all, SpaceX is not a publicly traded company. And right now there is no IPO on the horizon. Elon Musk's Mars mission is a passion project and he himself admits there is a good chance of failure. So far, billionaire says he has no intentions of making SpaceX public until they have multiple routes, until they have multiple spacecraft with crews going to and returning from Mars. According to Musk, short-term demands of shareholders could conflict with his long-term ambitions. But some reports do suggest SpaceX could spin off its Starlink satellite business in a separate IPO. Whatever the case may be, how does one actually get in on this pre-IPO action for SpaceX or any other company for that matter? And is it a good or a bad idea? After all, these companies are raising private equity in regular funding rounds, right? Someone is investing in them before the IPOs. I did some digging on Reddit's Wall Street Bets, of all places, and found some useful information that will tell you how to buy shares in SpaceX and other pre-IPO companies. Let's check it out. Slimed Cards writes, I see people constantly wanting in on the Elon Musk cult of companies, mainly SpaceX due to large potential growth and cult following. A lot of people think you cannot buy shares in SpaceX, but you can, and you can also buy other pre-IPO shares of hundreds of companies. Do this at your own risk. First of all, have a lot of money. Stop right there if you don't make $200,000 individually or $1 million in net worth excluding primary residence. Second, how to buy these shares. It's unlikely that you can go directly to companies unless you got a private broker and are really rich. But luckily some smart people realize that some rich folk want in. I will talk about Equities then and Forge Global. Both of these sites offer funds and allow direct share purchases. Keep in mind that there are minimums, often 10 to 20k in total purchases as well as 3 to 5% fee of the total transaction. And a fellow user says that SpaceX is $250k minimum order. Third, how it works. You get access to roughly current share price, you submit an offer. If you want direct shares, they will try and find sellers, often employees who don't want to hold a large amount of stake in the company. They then say we found a buyer, you pay up, they handle all the paperwork for you. And after all the fees, you are now a shareholder. For SpaceX, with having endless rounds of funding, the shares are always pretty liquid. And if they ever IPO, you will be a rich man. Please check out their FAQ and do your own due diligence before doing anything stupid. Fourth, relating to SpaceX, they are probably my number one. They just inked an army deal with Starlink and are by far the best positions for space transport cost. Could be $1 trillion company if Starlink does as promised, not even mixing in a Mars colony. But also, the value is at the whim of Elon. If he dies or something happens, you're screwed. To quote one engineer, Elon tells us what to make. So have $1 million or $200k in income. Make an account with Equities or Forge Global. Submit an offer. Buy shares. This is not financial advice. Contact your tax person to make sure you meet all the requirements and potential tax bills. By the way, I might add that there's another platform for investing in pre-IPO companies, which is sharepost.com and angel.co. Feel free to check them out as well if you're interested. And here in the Reddit comments, Mushrooms4V says that he invests in pre-IPO through Forge and typical minimum for all companies is 100k. For SpaceX, it was 250k. I also appreciated this word of caution from Das Metal. Investing in Virgin Galactic SpaceX, especially pre-IPO, is a horrible idea. SpaceX isn't offering a tangible product to its shareholders, even in Tesla. Sure, they have some government contracts, but so does Lockheed Martin and Raytheon, with an actual product to give its customers. Virgin Galactic is built on the premise and promise of space tourism without anyone able to say they've participated in space tourism, rich as hell or not. All it takes is one Challenger incident to send SPCE plummeting. and for SpaceX to lose a contract to instantly lose its intrinsic value, even with it being attached to Elon Musk. On top of that, Musk has stated he has no intention of making SpaceX publicly tradable in the near future. And now let's look for another alternative method. There is also another way many YouTubers suggest one can invest in SpaceX. Google is a large investor in SpaceX. Many think buying Google stock or Alphabet, as it's listed on the stock exchange, makes you owner of SpaceX. While technically true, let's look at some numbers. Alphabet market cap is $1 trillion. SpaceX valuation is about $44 billion. Given that Google owns only 10% of SpaceX, that means that it represents only a really tiny fraction at about 0.4% of Alphabet. So by buying one share of Alphabet, you're only getting about 0.4 of SpaceX for your money. And there's nothing preventing Google from selling the SpaceX stock or buying more businesses, further diluting the SpaceX position. I personally would not suggest this method. But what about you? Do you think it's a smart idea, or is it pretty stupid? Wouldn't hurt to let us all know in the comments. Another method would be to work at SpaceX as an employee and invest at their internal market. But it's very competitive and they have a rigorous hiring process and a very high barrier of entry. However, as SpaceX grows, the opportunities to get hired should also increase. There are also funds like
Barron Partners Fund Institutional Shares, or BPTIX,
which holds about 4.82% of SpaceX and also a large portion of Tesla at 35.96%. If you're a fan of Elon Musk, this Ronald Barron's fund might be something you'd want to look at. This fund has outperformed S&P quite nicely in the last few years, mostly thanks to Tesla. But we all know that past performance is no guarantee of future results. And funds tend to often outperform indices for shorter periods of time until they revert back to the mean. Also, bear in mind that this fund has a rather high expense ratio at 2.22%. And as John Bogle used to say, in investing you get what you don't pay for. So I personally always look at funds with as low expense ratios as possible, or rather hold specific stocks directly. Every percent point paid to fund managers is a percent point you will lose in compound interest over the years. Also, with the recent tech stock hype, even JP Morgan are launching a new team to trade shares of pre-IPO giants including SpaceX, Robinhood, and Airbnb. Chris Berth, JP Morgan's global co-head of cash equities trading, says the following: "Many of our clients are looking at this as a next frontier. What do you do when markets get so high? You're going to keep looking at value down the chain, and maybe that means getting involved in companies at earlier stages of their life cycle." Maybe these are signs of a bubble? And that's about it on pre-IPO investing, guys. Thank you for staying until the end. There are so many other cool videos you could be watching. The fact that you stay with me until the end, it means a lot. I'm just a beginner at YouTube, so I appreciate any positive or negative feedback in the comment section. If you know someone who might find this video useful and interesting, would you be against sharing it with them to see what they think? Thank you for watching, and until next time, this has been Invest with Will West.